Dr. Fesharaki, how do you see the role of China reopening and economy coming back? Some say that it has actually been slightly on the softer side, the China reopen, versus what they had estimated earlier. So demand did not come back in the whole in a big fashion in China, and that is why OPEC actually took these steps to adjust the production. What are your thoughts on China demand?
Well, the difference between China and India is that in China, only one person decides everything. In India, 10,000 people have to decide everything. That's why things don't get done so easily. In China, based on what we understand today, we are still pretty bullish about the recovery. It may not be as great as everybody had hoped for, but it's still 600,000 to 800,000 barrels per day of demand growth. So most of the demand growth, both in COVID recovery and economic growth, still we expect in China. So we remain quite bullish. Now, maybe the Saudis see some weakness at the end of the road in there and decided to preempt. But, for the first time last month, China imported more crude from Russia than India did, 1.4 million barrels per day. And Chinese also are exporting refined products based on the cheap Russian crude. Substantial amount, more than 1 million barrels per day. So it is still not 100% clear that they will recover as quickly as we all hope for, but the signs are very positive.
Fesharaki, in traditional economics, the formula which applies is that for market share gains or gaining market share, a lot of companies go ahead and start cutting prices to compete in the marketplace. Over here, the two biggest buyers, China and India, biggest buyers of crude, are now tilting more towards one big supplier which wants to digress away from Europe to other buyers towards us, which is Russia. How is the market share dynamic playing out in the global energy market, from the big producers' point of view?
Well, the oil market is like a big swimming pool. If you take one bucket of water from one side and throw it to the other side, it's still the same swimming pool. So before, the Russians were supplying a great deal of oil to Europe, and the Saudis, Iraqis, and the Kuwaitis were supplying, and the US was supplying China. Now, China and India, they are buying more from Russia and buying less Saudi crude, less Middle East crude, less US crude, less Kuwaiti crude, less Iraqi crude. So the market balancing itself still. If there is a willing buyer and a willing seller, oil moves. So there is big swimming pool. In the LNG market, there is not one big swimming pool. There are many small pools which are not connected. But the oil market is connected. And so far, everybody who wants the oil can get it. The people who make a lot of money are the shipping people. To bring a barrel of oil from Europe to India may cost $15 a barrel of transportation because it's in the wrong place. So a lot of extra money is paid by the people who want to do the shipping outside of the normal, natural home markets. But there are now 600 ships in the so-called dark fleet, which is not registered by anybody. They're small, old ships. And people are there, and they are moving the oil without having to worry about the European insurance, European price cap, and all the rules of G7. So it is moving. Surprising to everybody else, it is moving much better than everybody expected.